Preparing for negative rates. Let's have a look. Hello everyone, Florian.heise here, and welcome to another episode of HeiseSays. Grab your stein of coffee because, well, they're preparing for negative interest rates here in Australia. Isn't it fantastic? We're going to look at some requests for information sent to Australian deposit or authorised deposit institutions here in Australia. And, well, let's question to see if that's going to be something we should be concerned about. But before we look at that, let's just jump to our sponsor for this video, which is our US channel, HeiseSaysUS. Let's have a look. Same thing, focused on US articles and news. Make sure you check it out. Anyway, guys, negative interest rates. Living with negative interest rates. Now, we can see here you've got 3 countries at the moment that have 3 negative rates: Japan, Denmark, and Switzerland. Now, the Eurozone is at 0. Then you've got Singapore at 0.01. And then UK, Poland, Israel, and Australia at 0.1%. So we're not at the absolute bottom, but, you know, there you have it, guys. We're pretty bloody close. And Denmark, interesting story. We have a video I did earlier in the year, just, well, negative interest rates and the experiences of a business owner who had to deal with those from Danske Bank. How the negative interest rates were impacting his business. It was having a flow-on effect just to the cost and ability they had to run. It was money that could be going to training, could be going to improving their business, even, you know, just because as a business, you can't just spend all your money. You need to have a float. So it's just another cost. Now, are we going to get this here? Is this the prelude, the first step for negative rates? Because they're looking at it, and other countries, jurisdictions have done it. What about Philip Lowe? What does he have to say? There's a few quotes here that I want to draw to your attention. Negative interest rates in most countries do impair the profitability and efficiency of the financial system, and ultimately its ability to provide credit to the real economy, which is really important. In many countries, there's increased concern that negative interest rates encourage people to save more and not spend more. This is the thing. They want to have money flowing through the economy. They don't want it stalling. They want to ensure the velocity of money keeps going. And, well, negative rates, what's it going to do to consumer confidence? Could you imagine in the Australian news how people would react if we had negative rates? Houses would probably go up even higher. Quick, borrow more to get a big... I can see the articles now. Borrow more to get a bigger house so you can get more on your negative rates. So it's not about bank profits, it's really about jobs. My current view is that negative interest rates couldn't help jobs and arguably could make it worse. So our governor isn't in favour of negative rates, but how long will that last? And can you trust them? Does it matter in the end? I mean, right now, everyone, the cash rate is sitting at 0.1%, as I said. And, you know, negative, how much room do they have to move? We'll be looking at another article at the risk of raising rates, the potential impact that could have on the economy. What intervention would the government do to keep everything going? You know, we can't be surprised anymore. Look at what they've done the last year. Look at how many tricks they've pulled to keep it all going. So let's have a look at it. This is what came out from APRA. So the Australian Prudential Regulation Authority has released for consultation a letter to authorised deposit-taking institutions on its draft expectations regarding ADI's preparedness for the possibility of 0 and negative interest rates. Okay, so they sent a letter and they're asking for responses to it. So let's go through it. So APRA is today releasing for consultation its draft expectations regarding ADI's preparedness for 0 and negative interest rates. There you go. They're preparing for it, so either they're really well prepared, or this may be in the cards. The Reserve Bank of Australia has stated that a negative cash rate is highly unlikely in Australia. This, however, does not preclude the possibility of a negative cash rate in the future. Irrespective of the level of the cash rate, it is possible that other interest rates determined in the financial markets could fall to 0 or below 0 at any time. Accordingly, in December 2020, APRA wrote to all regulated entities regarding their preparedness for zero and negative interest rates and requested entities with material readiness issues to advise the nature of the issues and the timeframes for rectification mitigation. Responses from ADIs indicated that they are typically well placed to deal with zero and negative market interest rates on financial market products, such as those typically managed in a treasury system. However, for some ADIs, zero and negative interest rates on other products, e.g. wholesale and retail lending and deposit products, would pose operational challenges. Furthermore, a number of ADIs noted high costs and competing priorities as being constraints for the implementation of permanent solutions. See, this is the thing. If you're going to have to modify your computer systems and your software, which is what I imagine is going to be the impact of this is going to be an IT cost. Do you want to spend the money on it if it's not certain? How much money are you going to have to invest to ensure that you can future-proof the systems to allow this to happen? Then if you do, there are going to be people who are thinking, oh, we've got a sunk cost fallacy. Come on, give us negative rates. We want them. So risks from zero and negative interest rates. So Prudential Standard CPS 220 risk management requires an ADI to maintain a risk management framework to manage material risks. As defined by CPS 220, material risks are those that could have a material impact both financially and non-financially on the ADI or on the interests of depositors. APRA considers the risks arising from an ADI's lack of preparedness for zero and negative interest rates to be material, since this could have significant implications for an ADI's risk management, hedging, operational processes, contracts, product disclosures, IT and accounting system, among other areas. Insufficient preparedness for the possibility of zero and negative interest rates could therefore have an adverse impact on an ADI, its customers, and the markets in which it operates. Well, I think the whole notion of negative interest rates would have an adverse impact on all of us. I guess no. Well, if you're mortgaged up to the hilt, you may love it. You'll be making money for being in debt. Oh, could you just imagine housing, guys? There'll be a generation, if you have this, that won't know what it's like. There'll be people in the past. I'll be telling them when I was a kid, I got 5% on a deposit, term deposit. What, they paid you money? They didn't charge you? We're going back to the ancient, to age of sale, when you had to pay money for a bank to store your physical wealth. Accordingly, APRA has set out below its proposed expectations for ADI's preparedness for zero and negative interest rates. In developing these expectations, APRA has taken into consideration the responses received from ADIs to its December 2020 letter and international experience. So their proposed expectations. In order to ensure that ADIs can operate with zero and negative interest rates, if required, APRA expects ADIs to take reasonable steps to prepare for scenarios in which the cash rate and/or market interest rates may fall to zero or become negative. More specifically, APRA expects ADIs to, at a minimum, develop tactical solutions to implement zero and negative market interest rates and cash rate by the 30th of April 2020. Tactical solutions are typically short-term fixes involving workarounds on the proprietary existing systems along with overrides in downstream systems. All products and activities are in scope for this expectation, except for lending products that do not reference the cash rate or a market rate, including business lending, residential mortgages, personal loans, and credit cards. Solutions that generate an economic outcome that is the same as a negative interest rates are acceptable, subject to the appropriate risk management considerations. In developing tactical solutions, APRA expects ADIs to consider all aspects of the products and activities that are in scope, including customer communications and disclosures. Further, ADIs should assess the associated operational risk and ensure that the appropriate controls in place to manage them. ADIs should also consider any relevant conduct-related issues, including the potential for conflicts of interest, fair treatment of clients, and asymmetry of information. So ADIs can comment and provide feedback on the expectations outlined in this letter by emailing negativerates@apra.gov.au by the 20th of August 2021. There you go. and they need to copy in their supervisor. So here's the question. What would you prefer? Negative rates or mortgage keeper? Let me know in the comments, guys. There you have it. Is this a preparation for negative rates or just planning on behalf of APRA and the banks? Let me know what you think. As always, thanks for watching. Like, share, subscribe to the channel. If you want to support us, there are a few ways you can. You can sign up for SelfWealth or Stake. Use our affiliate links at Amazon, eBay, Independent Reserve, or AussieBroadband. Buy a merch from HeiseSays. Use Gold Pass from the Perth Mint or support us via PayPal. Take care, everyone. Have a great day. I'll see you next time. Bye for now.